Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, everyone is max long this market. You pretty much see the sentiment everywhere. So, should you be max long this market? Well, we're going to show you some data and some charts, and then you'll have your answer. Let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
So, Bob, very bullish sentiments in the market. What say you?
Yeah, Phil, let's start talking the economy here. The economy is leading the stock market. Stock market's not leading the economy. You know, they're trying to paint a bullish picture here, but as you know, breadth is collapsing across the board. And then I have a chart here called RV sales. Very reliable. When RV sales have multi-quarter declines in sales, is that we roll into a recession. And this thing's like 100%. And you can see here, I mean, sales have literally collapsed. And can you imagine? You know, you used to be able to probably get an APR of 5 or 6% for a $200,000 RV, and now it's probably 10 or 11%. Mm-hmm. There's no way you're buying an RV. And so this is a really good tell on discretionary purchases are collapsing. Now I want to flip to the next chart here and kind of go back into talk stock markets here a little bit. Everybody kept saying, oh, retail is long, retail is wrong, right? And, you know, we say that too, and which is also a true statement, but they're not the only ones long. So you have basically the institutional money managers are even as aggressive, if not more aggressively long than the retail traders, Phil. Check this out. Every time we cross these thresholds of basically sentiment for the Fear Greed Index and also the exposure index, we get a very, very big sell-off in the markets. And we're here again. And really what this tells you is that there is no more wall of worry to climb because you're on top of the wall. There's no more FOMO because everybody pushed in. And the people who haven't pushed in have rolled all their money into the money markets, which are some we should probably talk about tomorrow ahead of the Fed meeting, because the banks are really, really going to be in bad shape here because more and more money is even ever before now is moving in the money markets, which brings me to our third slide, the inversion of the 10-year and the T-bills. And there's never been this out of bounds before ever. That's why I kind of laugh derisively when people say, well, in the past this has happened. I think you can agree with me that we're unprecedented territory. I think we can almost throw away what we thought about the past in terms of the levels in which they have gone through to keep the Ponzi scheme going here in the markets. And I'm going to throw it back to you.
No, I agree. The interesting one for me was the name exposure index is at a 90, which is the highest reading that we've ever had since we topped out. If I can go back to that slide real quick. So we're at, the sentiment here is more than every other bear market high that we've had in this market. Okay. So, and on the whole too, if you look at this market, if you go back to 2022, okay, that's when we went from QE to QT. Okay. And what have we done? We've essentially clawed back more than half of the initial drop. And that's not uncommon in bear markets. So, with all of the indications here, right? And it's easy, everybody gets bulled up because you're like, well, we just made another high here in the market. But you're in an environment that's not bullish, right? Because you have overexposure in positioning. That doesn't even get into all of the recessionary data points that we've been getting into. So the question is, well, then, what is driving the market higher? And it's quite simply the liquidity in the system. But as we've been saying, that's going to start to come out of the system. So Yellen drawing down her account to zero is always going to be bullish for the stock markets, regardless of the economy. Okay, that's just the way these markets are, and so that's why we figured we wouldn't see really the effects of all this until the second half of the year, and then I think it's going to be amplified, and I think it's going to be worse than the first half of 2022. But yeah, to your point though, when the yield curve and everything else is signaling what they're signaling, and the yield curve is to this extent, it's just really hard to make an argument historically that we're in a new bull market. And you don't usually start a new bull market when things are trading at like 20x earnings, right? That never happens. That's like the end of a bull market, not the beginning of a bull market. So unless you're just going to throw all the data points in history out the window, I don't see how you can, with a straight face, say that we're going to be off to the races here and off into a new bull market, Bob.
Yeah, and that's the frustrating thing for me when they say the stock market's at new highs. No, the Qs are at new highs. You have oil markets down, energy in general's down, precious metals are down, commodities are down, home builders are down, Bitcoin is down, small caps are down, banks are down. So really, what they're trying to tell you is, everybody into the pool, we have a new bull market coming, so now start lifting all those other segments up to catch up with this absolutely mind-boggling overvalued NASDAQ. And, and when Phil and I talk, I don't really care so much about what happens today or tomorrow or next week. We're talking to you because in 6 months and a year from now, are you going to be positioned for a market that's going to be significantly lower? And I think that's what people need to really focus their head on. If this is going to be a day trading podcast, we'd have a whole different conversation with you guys. But we're not there. We're really talking to you guys about, this is macro. And these bear markets, when they put their teeth into this, is the big move coming, is that it's going to wipe people out. In 1929, they said it wiped out the dumb money. And in 1930, it wiped out the conservative money. And in 1931, it wiped out the smart money. And I think that's what's going to happen here. Everybody thinks they're so smart, they're going to start getting wiped out. And just because these moves that that come in, the angles that they're coming on, Phil, they roll over just as hard. And you want to be the one with cash at the bottom of this move. And we still have, 18 months plus left in this bear market till we reach a bottom. And if I'm wrong on the bear market, then we're having hyperinflation. Okay. And that's a whole different set of animals that we have to deal with. But we're not seeing that. We're seeing deflation coming. And we're going to talk a little bit more about that as the weeks come, because China is going to be one of the big reasons why deflation is going to come really, really hard. And I think it's going to shock people. That's all I got, Phil.
All right, guys. Well, that's going to do it for our podcast today. Let us know your thoughts. Do you think the market's going to keep going up? If so, why? And how high do you think it's going to go? Otherwise, let us know if you think it's going down, and how far down do you think it's going to go. Thanks for watching, guys. Please hit like and subscribe. We'll see you on the next one. Thanks, Bob. We'll see you guys later. Bye-bye.
Trade Genius.